Let's bring in our next guest analyst and see what he's got to say about it after saying what those markets are doing. Bring in Craig Bolanos. He's a co-founder and wealth advisor at VestGen Wealth Partners in Chicago. Craig, thanks for coming on, brother. Happy Memorial Day weekend to you. What's top of mind for you today?
Memorial Day is going to be fantastic. 250 America is going to be even better. And I just don't know what the Iranians are thinking. We're going to keep the uranium now? I mean, come on. What leverage do they really have at this point in time? But I think it's a great time as we come up to the midpoint of the year for everybody who's an investor who missed out on locking in 4.5% to 5% yields. They're back. I say get them while they're gone. If you're an income-oriented, interest payment looking investor.
There's probably not a lot of people out there that are as old as me. You're a little younger, but there used to be a Monty Python skit where they, it's come back and fight like a man. This is just merely a flesh wound. That's what the Iranians remind me of. Because they've been so cut off at the knees, but they're still acting like there's nothing wrong and it's full steam ahead. But having said that, this market, we will get to the end of this. My father used to say this all the time when I was a kid. When we don't know the ending date of something, and I liken this to maybe a prisoner of war in World War II, right? You don't know how long this is going to be. We all, when we watch those movies, we know the World War is going to end in 1945, but the people that were in it at the time had no idea how long this was going to go on. So what do you do to keep yourself focused when that's happening? My father would just say, focus on the fact that you don't have to do today over again. You got one more day, you can cross off the list. I don't know how long this is going to be, but I do know one thing for sure is I don't have to do today over again. And that's what we have to I think we have to employ that mentality here, because this is going to end. We just don't know when. And we have to make sure that our portfolios are set up for what it looks like when it finally does end. And I know we've been talking about it till the cows come home, no pun intended. But, once oil is solved, it's going to solve a lot of other things, isn't it?
Well, once oil is solved, it's going to solve a lot of things. I mean, this is a time of new beginning, right? I mean, we've got a new Fed chair who gets started today. That Fed chair's got to decide what's more inflationary, oil or artificial intelligence, because artificial intelligence near term is inflationary. Long term, everybody knows it's deflationary, which is a great spot for us to be. I think that Fed chairman's going to have to balance out the relationship with the White House. I think that should be relatively easy, but it's a new day. It's a new dawn. But again, everyone gets to ask themselves, what do my investments need to look like when I grow up? And with starting bond yields being the highest they've been in some 4 years, I think it's a great opportunity for people not to look past that and start locking in some coupons. And again, I would make an argument that yes, investing in the Mag 7, investing in crypto, software stocks makes a lot of sense, but there's still a revenge game getting played, Scott. That's the revenge of the old economy. So please do not look past those industrial, energy, and material stocks, because there's a lot of incentives out there. Look at the changes in the One Big Beautiful Bill Act, right? Deductibility of auto interest. Come on, that's a big deal. If cars are assembled in America, at least their writing authorities were smart enough not to write, made in America, but we can certainly do assembly in America. And I think they're going to continue to see a lot more of that reindustrialization here, especially given the thriving energy independence we have in America.
A few bigger money managers have come out and said exactly what you said, and they also said that maybe it's time to start making sure you are investing in things that kind of run these AI data centers and the likes. This boom will probably spread out to other things, and a lot of them are using this as an example. But if you look at, say, year to date, and these changed yesterday, I know, but roundabout numbers, Dow is up 3% year to date, the S&P up 8%. And the NASDAQ up about 12.5%, 13% year to date, okay, around about those levels. But the Bloomberg Commodity Index, which I used to look at all the time, that's up 29%. And that's not just gold and oil. There's a lot of other things in that index that are benefiting from, that are things that have to be in a lot of these things that we're building right now because of this AI boom. So I don't know about anybody else out there, but I didn't have on my dance card that the NASDAQ would be up 12.5% and commodities up 29%. But that's the situation we're in so far, 5 months into the year. But it does make sense because we need a lot of those things. We need a lot of those commodities to help build what we're building when it comes to the data centers and the power that they need.
Yeah, that's correct. Don't just look at the data center. Look at everything that goes downstream and upstream from there, right? I mean, make sure you own the fiber optic networks. Make sure you own the cell towers, the things that get the data into and out of the data center. Make sure you own the entirety of the energy complex without worrying about whether the energy is green or brown. It's just a race for energy, guys. That's what it's about. And don't forget all of the basic core materials that are needed to build these and then cool these. It's not just about the semiconductors, it's about the totality of the ecosystem. And I think it's really exciting. And I probably sound like a dead horse and you want me to move off the topic, but Scott, I got to come back to it one last time.
No.
When you and I started earlier this year, I said, hey, 7,300 to 7,700. 7,300, I thought we'd get to. 7,700 was my best possible outcome for the S&P. Good heavens, we're right in the middle at 7,500. So it screams it's a great opportunity to be rebalancing only because trees don't grow to the sky and only because it is a midterm election year. And history tells us in those midterm election years, we have an 83% chance of having that larger drop. I didn't say bear market. I didn't say recession. I just said a bigger drop. I think one is still at hand. We washed out a lot of stuff in March and April. Certain sectors got hit, but I wouldn't be surprised at all if it's a continuing oil shock, a supply issue, or something else, that there could be some difficult days in the fall before we get back on our horse and continue to ride higher.
I'm an old man, Mr. Bolanos, and I can tell you this, there's always something. There always will be something around the corner. You just have to, make sure you're positioned for it and you can handle it, and whatever it is you can stomach, and away you go, because each year we get something, and I don't disagree with you. We could have a sell-off, but I'm going to use it as another opportunity because I don't think I've seen a better investing environment in my years in the market ever. I mean, this is my 39th year. I don't think I'm very, very excited about what AI is. AI is a difficult thing. It's a double-edged sword at times. I get that. But I really do believe that it's going to transform our economy a lot more than the dot-com era ever thought it could. So appreciate you coming on, brother. Have a great holiday weekend. I know you're going to have some fun. Craig Bolanos, he's the co-founder and wealth advisor at VestGen Wealth Partners up in Chicago. Thanks for being on the show, brother.